Hey traders, welcome back to another episode of Forex Market Breakdown, the podcast where we cut through the noise and focus on what really matters in the currency markets. I'm FX Videos, and today is March 20th, 2025. We'll go over today's major moves, the catalysts driving price action, and most importantly, what to expect heading into the next workday. If you're serious about Forex, grab your notepad and let's dive in. Let's kick things off with a full breakdown of today's market action. The dollar was front and center again, showing volatility against multiple pairs. Here's how it played out across the board. US Dollar Index, DXY. The DXY hovered around 104.80, climbing 0.35% on the session. The catalyst: better than expected U.S. jobless claims and hawkish Fed comments. Traders continue to digest Fed's recent rate outlook, hinting at a possible June rate cut but with strong economic data clouding that certainty. Euro to U.S. dollar. Euro dropped to 1.0830, shedding about 0.4%. The European Central Bank is walking a tightrope between inflation control and economic slowdown. Market sentiment suggests a potential rate cut from the ECB by mid-year. Pound sterling to US dollar. Sterling slid to 1.2620, facing resistance near 1.2700. UK inflation data came in hotter than expected, which led to speculation that the Bank of England may hold off on rate cuts longer than previously thought. US dollar to Japanese yen. The pair spiked to 150.40, nearing intervention levels. Bank of Japan, BOJ, stuck to its ultra-loose policy, but traders are bracing for potential intervention if the yen weakens further. Gold and commodities impact on Forex. Gold prices hovered around $2,190 per ounce, holding steady as the dollar gained. Oil climbed to $81.20 per barrel, supporting commodity-linked currencies like CAD and AUD. Now that we've covered price action, let's talk about the key drivers behind these moves. Fed's rate cut expectations. The market is pricing in a 65% chance of a June cut, but strong economic data is casting doubt on that timeline. ECB's inflation challenge. The European Central Bank is caught between slowing economic growth and sticky inflation, leading to uncertainty in the euro. BOJ's dilemma. The Bank of Japan is reluctant to tighten policy, but a weak yen could force government intervention soon. Geopolitical risks. Ongoing tensions in Eastern Europe and the Middle East continue to keep traders on edge, affecting risk sentiment. So, where do we go from here? Let's break down what traders should watch for as we head into the next workday. USD outlook. Expect continued dollar strength if economic data remains robust. Watch for Fed speakers tomorrow, as any shift in tone could move markets. Euro to US dollar levels to watch. Support, 1.0800. Resistance, 1.0880. ECB rhetoric will be key. A dovish stance could send the euro lower. Pound sterling to US dollar levels to watch. Support, 1.2580. Resistance, 1.2680. UK retail sales data coming up could add volatility to the pound. US dollar to Japanese yen watch list. If the pair breaks 151.00, expect potential intervention from Japan. Support near 149.80, resistance at 151.50. Gold and oil impact. Gold remains range-bound, with support at $2,180. Oil may continue climbing if supply concerns persist. Before we wrap things up, let's discuss a few strategies for navigating these markets. Stay flexible. This is a data-driven market, so don't get married to a bias. Watch the news. Fed speakers and economic reports will dictate price action. Risk management is key. tighten stops on volatile pairs like US dollar to Japanese yen. Commodity currencies in focus, CAD and AUD remain correlated to oil and risk sentiment. That's a wrap for today's episode of Forex Market Breakdown. If you found this valuable, make sure to subscribe and leave a review. It helps us bring you the best Forex content out there. Trade smart, stay disciplined, and I'll catch you on the next episode.